Hello everyone, welcome to my new video. So I have made this video about Ukraine crisis and how it is going to impact India's growth because right now we are seeing that there is a difference in opinion of RBI, of the public and of analysts. So we will be seeing that how this Ukraine crisis has actually impacted India's growth and what has been its impact on oil prices, on global supply chains and then on India and how can we manage the inflation that it has led to. And finally, we will be seeing that what has been the lessons that we have learned from this crisis. So let's get started. Before going ahead, I have already shared the text analysis on my Telegram group. If you want to join it, you can find the link in description. I also share daily mint analysis on that group. So as we already know that it has impacted oil prices. But now how this oil prices has impacted the economy on a whole. So the background is that Russia was the largest exporter of crude oil and India meets 80% of its demand from oil by importing the oil. So not all the 80% is imported from Russia, but some amount of it has been imported from Russia. So now the impact is that after the war, oil prices went up, which has led to cost push inflation. So you might have known that there are two types of inflation. One is cost push inflation, the other is demand pull inflation. The cost push inflation happens due to the decrease in aggregate supply. However, demand pull inflation happens because the aggregate demand increases and that leads to increase in prices. So in both the cases you will see that the price will increase. In cost push inflation, the price will increase because the supply has decreased. In demand pull inflation, prices will increase because the demand has increased. So in both the scenario, prices will increase, which will lead to inflation. Now, the second impact is that India used to import edible oil as well. So when we were talking about what will be the impact on India of this Ukraine crisis, we saw that we would be able to manage other things, but the sunflower oil will need to be managed because we used to import such a high amount, which is more than 90% of sunflower oil from Russia and Ukraine. So, in this crisis, we would fall short of sunflower oil, and managing this was a big task. So, these are the two main impacts that it has led to. One is cost push inflation, and the second is that we had to arrange the edible oil in large amounts, because of which right now we are seeing that the sunflower oil, the prices have gone multifold. So these are the two impacts. Now, what has happened to the global supply chains? So most of these supply chains got interrupted because Russia and Ukraine used to export these commodities. What were these commodities? So Russia and Ukraine combined used to export 25% of total wheat. So now these nations which used to import wheat from Russia and Ukraine, they were not able to fulfill their demand. So now it gives India an opportunity to supply the wheat to these nations because anyways India is doing good in terms of agriculture. So it's an opportunity for India to tap those opportunities to gain more market access. So this has opened up a new opportunity for India. Now second is that Russia, Ukraine and Belarus, they used to export majority of fertilizer. So since they are now at crisis, the fertilizer cost has jumped up and it has gone more than 50% up, because of which even India is getting impacted. So what the government is trying to do, it is trying to divert the farmers attention towards organic farming, because if farmers continued buying fertilizer, then government will have to subsidize this fertilizer, which will add pressure on government's pocket because they will have to give the subsidy amount to the manufacturer or the one who is supplying it. So that's why they are trying to move the farmers towards organic farming. Now, third is Ukraine is the major supplier of neon, and neon is the key ingredient for chips. Now, because of this crisis, there is a shortage in semiconductors, and due to that, we have seen that the electronics item that used to have semiconductors as their raw material, they used to take it. So these items are getting more pricey, and you are seeing that there is inflation even in laptops, mobiles or computers. So this is the impact on our daily life. So these are some commodities and how it has impacted the global supply chains. Next is what has been the impact specifically on India. We were right now talking about the global supply chains. Now on India, the first and foremost thing is about fertilizer. Since our economy is dependent on agriculture and more than 50% of workforce is engaged in the agricultural sector, and right now we are going to see harvest season. So because of it, the subsidy bills that a government used to provide, so the certain subsidies that government used to provide, they have increased the expenditure because the fertilizer cost has increased by 50%. So this is the first major impact on India. Second is that we used to import 80% of oil demand, and now the crude oil prices has increased, the edible oil prices has also increased, which is leading to commodity prices being increased. Now, apart from this, we can say that there are certain industry which are seeing the impact, such as automobile industry, aviation industry because the jet fuel that we see, it accounts for around 30 to 40% of operating cost for an aviation industry. So that's why aviation industry has also been impacted. Apart from this, automobile has been impacted because right now the consumer are seeing that they will have to incur more cost if they have to use their own vehicle and get some petrol in their vehicle. So that has impacted the demand of private vehicles as well. Apart from this, there is cement industry which uses oil derivatives such as pet coke. So pet coke has seen increase in prices, because of which the cement industry is also getting impacted. And now indirectly, because cement is used in real estate industry, the real estate prices might also, because cement is used in real estate industry, which might push up the cost for house prices. However, it has not impacted that much of house sales, but somehow it has impacted the prices itself. So these are some of the changes that we have seen. Now, third is consumer demand has not recovered. So since we were just on the recovery stage after pandemic, the consumer demand has not recovered, because of which there were the certain companies that we have seen, such as any other major company like IDC. These are the major players. They hold majority of market share, so they have the position to increase the prices. However, they are not able to do so as much as they want, because the economy is still recovering, and if they increase the prices, they might see a decrease in the volume of sales, because of which they it will start impacting their margins, and right now they are actually facing the pressure on their margins. However, we have seen one case. So since there is cost push inflation and company has to manage their profits, they have to also serve the shareholders. So in the case of Nestle, what we have seen is that they have reduced their advertisement cost drastically, because of which they were able to maintain their margins. So their raw material costs were going up, but they managed to decrease their advertisement costs, because of which they were able to sail through. So these are some of the changes we have seen in the recent times. Now, next is managing inflation. So you know that there is cost push inflation, and this cost push inflation cannot be managed by monetary policies. So monetary policies are introduced by RBI and fiscal is introduced by government. So what are the type of monetary policies and how do they impact? So monetary policies are formed to control the interest rates and money supply. These are the main two components. And these two components can successfully manage demand pull inflation. However, they are not that much effective in managing the push inflation. So, for cost push inflation, we will need some fiscal measures, and fiscal measures are like introducing taxes or introducing subsidies which are implemented by government. So fiscal measures are needed rather than the monetary measures. So this is the first point, how we can manage it. Now the second is that GDP growth, inflation, and all other such factors based on which the policies have been formed, the budget has been formed, they will need to be revised, because it was based on one major assumption, that was that the petrol prices are going to be around $75 a barrel. However, there are now currently it is around $100 a barrel. So because of which the figures needs to be revised so that more effective policies can be formed. Now the lessons. So what are the lessons that we have learned from this scenario? is first that we were too much dependent on Russia for the defense equipment. And if we were dependent on defense equipment from them, then right now in such a geopolitical crisis, we still have to get the updates in defense equipment from them. So it further increases our dependence on Russia. So, because of which you have seen that in the current budget itself, the government has increased the spending on defense equipment. And previously it was 58%, now it's 68%. So, it is giving a push to domestic industry that start manufacturing the defense equipment in the country itself. Although you might have seen that it has seen some criticism, because if you are starting to manufacture a new thing in which you don't have that much expertise, then then you have to incur more cost on research and development. So because of which, if research and development cost goes up, then your final selling price also goes up. Now second is that we were too much dependent on nations for fertilizers and semiconductors. So India being a majority in India, majority of workforce, if that is dependent on agriculture, and such a key important material which is fertilizer that we are importing from outside, that increases the dependence on any other nation. So India must start, many either decrease the dependence on fertilizer or start manufacturing the fertilizer itself. Now, for manufacturing the fertilizer, there is another raw material which is ammonia that needs to be imported from other nations, and that has also been hit due to the geopolitical crisis. So, in this situation, the farmers are getting encouraged to adopt organic farming. So these are some of the steps that government is taking. And the second is for the semiconductors itself, government has launched product linked incentive scheme so that the semiconductor production can be done in the economy itself, and we can reach a point where we invite other manufacturer in our country, and further when we improve the quality, we can export it to other nations and thereby increasing our GDP growth. So that is what we are thinking of. Now the third is that we used to import 80% of our oil demand from outside, but this is not a sustainable economy, you can say. So that's why we are moving towards alternate sources of energy. And that's why you have seen currently there has been a push in PLI scheme for EV and advanced chemical cells. So in EV, since you need batteries and not oil, that's why you are reducing the dependence. And the second is advanced chemical cells, which is used in batteries. So by introducing this PLI scheme, the government is further reducing the dependence on oil and moving towards alternative sources of energy. So these are some of the things. Other than that, what we have seen, the opportunities that we have seen is that the steel industry, the aluminium industry, they have started receiving inquiries from the European Union because they used to import it from Russia, Ukraine, and due to sanctions, they are not able to do so. Hence, they are reaching out to India. And now you have seen that many corporates itself has started investing in these industries, in steel industry, in aluminium industry, so that they can gain the returns. So these are some of the things you might have come across if you are reading the newspaper on daily basis. So steel, aluminium, pharmaceuticals, these are some of the industries. Apart from this, we have seen that the Russia said that we won't be taking any international projects to take aircrafts, to take rockets into the space. So hence the need for Indian space also gets an encouragement, a push. So even we can carry the satellites that they want to send in space. So it increases the projects in our hand. So space is another, another sector that has opened up the opportunity. So these are the changes that we are observing, and right now I hope that it has given you some clarity that what can be done. And actually the figures which matters right now, the revised figures based on which new policies will be formed, and even in that too, RBI doesn't has much role to play, however government has a much larger role to play. So thank you for watching this video. If you want to join my Telegram group, please join it from the link given in description. And I also provide mint analysis. So thank you so much for watching.